Right now, it's on track to go above 300. I think we're there. We're just sort of pausing. I reckon where we're at right now is sort of a halfway intermission. Actually, the name of like my last letter was called intermission because we're at the halfway point. Every time miners sort of exceed their prior all-time high, the last one was 2017, obviously at the top of the market. Since then, we've had a halvening, so they're mining half the number of coins per 10-minute block. So they've got to make that up with higher prices. And we just passed through that zone at the weeks, a few weeks ago where we went into this consolidation band. If you look at whenever they go through this zone, price goes through like a consolidation. And if you remember the double pump of 2013 on the charts, that was that big sort of run up and then it corrected, I think 93%. But if you were tracking the minute chart, but people thought that was a bear market, but that was actually the consolidation of 2013 because it was such a volatile asset. And we saw the same thing in 2017. We had that first major dip around the 2,000, 2,500 zone. We went through this big consolidation. That marked the sort of a halfway point before we ran up again. And we're just making that breakout. So and if we have the same sort of quarter that we had in the first quarter, it seems too fast. And that would normally spell the bear market. And it might come early if it's going up at this rate. I use a bunch of models. The main one that I'm predicting the top on, that's a moving average essentially. It's something what tech traders will call a mean reversion model. And that simply is a moving average. Like a lot of people use moving averages on the price chart. And when it starts to run away from the moving average, you tend to think of that as being overheated and it's going to come back to that average. And this is a special one where it's not rocket science. It's essentially the all-time moving average. It's a cumulative moving average, like the entire average for the entire price of Bitcoin since year dot. It uses that as a metric, and it happens to have hit every single top that we've had in the history of Bitcoin. And so if you measure that line, it gives you an upper bound where we can hit before it's got to come back down. So the longer this bull market runs, the higher that top can go. And right now it's so fast. Normally this line, the top cap model, it curves upwards near the end of the year. And so if it goes straight line at 300,000, if it starts curving up, we're going to hit 400, 500. I don't know how high it'll go, but it's really great because, Plan B sitting there with his stop to flow model, which gives a hard number of 288,000, right? And mine is like, I don't care. As more money piles in, this line keeps moving up. It's a moving target. So, but, even that 288 target, you'll see that it overshoots. It always overshoots its fair valuation based on scarcity. It's based on that model. It overshoots. So if it's 288, it goes to 3, 4, even 5. It kind of fits his model because we overshoot and we come back down on the other side of it. Right now, I don't know if anyone's talking about it. If you lay down the Fibonacci retracement line, so what that is Fibonacci numbers, magic spirals, golden ratios, all these sort of patterns in nature. So it turns out markets are patterns in nature, and you put that trace over the price chart, and the next resistance is exactly in the zone what we're contesting right now, which is 63.4 thousand. And we're just working our way in that zone. Normally it goes sideways, it tests it or rejects it. So it's going sideways. Once we get past that, I think it's 74,000 is the next fib level. So it should be relatively clean sailing up to there. I have a model right now. It says we can't go past 84, 85,000 based on the amount of capital that's come into the network. And right now, today, there's no way it can get past 80, 84, and that's going to climb as time comes. As more capital goes into the network. So obviously when we get to 70,000, whenever month that is, or whatever weeks in the future that is, more capital's coming in because we've got 150,000 people coming in every day buying Bitcoin. I call it a scare wall. So essentially, you put a big sell order, and it's this big wall of death. And so particularly if you're a trader, you're going to buy the derivative, and you're going to buy it thinking, okay, I'm going to buy it here, and the price is going to rip upwards if it's a long position. And then I'm going to sell slightly above that, and I'm going to cash home. But when you suddenly see this big wall of death saying, I want to sell $10 million or $50 million or $100 million of Bitcoin right at the price below where you bought, you're probably going to get scared, because that free run upwards is probably less likely to happen, because there's got to be someone that's going to take out that wall by buying $100 million of Bitcoin. And you might just decide you're going to exit your position. As you exit, that's called selling, right? Because you've just bought it. Someone who's got a large amount of capital, and these are derivative markets too. So say I've got like $10 million. That's a very small fund. It's a very small hedge fund. And say I leverage it up 10x. You can go 10x with that kind of sizing, trading 10 million. So suddenly you've got 100 million of sell power, and you just call everyone's bluff. You just go, all right, 100 million, sell wall. Let's see who gets scared. If they keep buying into it, you probably will pull it, and you're faking them down. A lot of traders, particularly whale traders that are savvy, then go, yahoo, it's alt season. Like when Bitcoin's going boring, sideways, we'll just deploy and move that capital off into altcoins, and you'll see altcoins tend to go up when Bitcoin is sideways without the threat of it breaking out and going to the moon. Because when it's about to break out into the moon and go into the moon, whales aren't going to risk that and go into altcoins. But if it looks like it's range bound for a while, they'll go into altcoins, and we get your alt season. But having said that, I think it's also kind of a dated proposition, because now we've got very well developed derivative markets and options markets that are slowly getting more liquid. It's interesting in this this bull cycle, that Bitcoin, with its immense liquidity and all of the derivative markets we've got, traditionally what we've had in crypto is people using altcoins as substitutes for what you can do now, so if it's a bull market, rather than buy XRP, Ethereum or whatnot, thinking you're going to get a higher run up in the bull market than just holding Bitcoin, you can just buy this other coin, and that's called a derivatives contract. So a quarterly contract that goes long on Bitcoin. And so if you do 1x leverage, you get double the return. If you go 3x, then you get triple. Altcoins are like, you need to know what you're doing. Like each coin has its own thing going on. And you've got all these Telegram channels and all these, Discord, Slack channels. And you've got to have endless amounts of time to understand exactly what's happening with each altcoin, whether they're introducing this or that in their monetary policy. And if you're trading altcoins properly, you need to know what's going on in your asset class, or your asset. You're really looking at Bitcoin, because it's like two planets in gravity lock, and the little coin is in gravity lock with Bitcoin's movements. And so it's much more of a complex, it's two degrees of investigation there. It's much more complex. So I can do this really simple thing, which is read capital flows into Bitcoin and get very good at it. What I do is, it's not about gambling as such, as fundamentally understanding where the market is moving based on the amount of capital coming in. I can tell a new person in Bitcoin because first they go, what price do you think it's going to go to? And they're thinking, I'm going to buy here and I'm going to sell there. So they bought it as an investment. They put it into their wallet, but they're already thinking, I'm going to sell at this point. So it is actually a trade. And then you get to this maturity, and you'll see this from all of the long time, Bitcoiners, and they really understand fully what they've bought. And they're going, no, this is the real deal. I'm in it to the end game because I'm backing this technology. And then you know that they're making a rational play and they're not swayed by emotion.